Orion's outlook for 2024, I would say that we're cautiously optimistic, but probably more emphasis on the caution than the optimism. And when it comes to the caution, there's really a couple different factors which are pretty key right now. First of all, the market is expensive. By every valuation measure, the stock market's pretty expensive. That doesn't mean we're going to have a bear market necessarily, but it does suggest below average returns. That's one issue. Another issue is interest rates. Interest rates are higher. They're much more competitive versus the stock market. You have an inverted yield curve, which would suggest the economy is going to get weak, so that's an issue. Investor sentiment is another issue. There's a lot of people who are really bullish right now, and usually at that sort of enthusiasm, you get below average returns moving forward. So that's the caution part. As for the optimism, the economy's still hanging in there, which is nice, but more importantly than that is there's so much liquidity in the system right now that it's an election year. So it's really hard to imagine the fiscal and monetary backdrop is going to get negative for the stock market. So you add it all up, it's cautiously optimistic. So when it comes to cautiously optimistic, I think the key thing for investors is, one, stay invested. But the second thing is stay diversified. And so while the U.S. stock market might have some issues, there's opportunity. There's opportunity in international markets. There's opportunity in certain sectors in the stock market. And there's other asset classes that make a lot of sense right now. Diversifying asset classes such as alternatives, real assets, they make sense in this sort of market environment. So stay invested and stay diversified. So how does the stock market perform in the year of a presidential election year? So, believe it or not, it's not that exciting in the sense that, well, first of all, the election is important to citizens, but as for investors, it's mostly noise. There can be volatility, but the market usually goes up regardless of who wins, whether it's the incumbent or it's the challenger, or if it's Republicans or Democrats, the market usually goes up. What's interesting is usually in the first quarter of an election year, the market sort of runs in place and not takes a step backwards. We didn't do that this year. So I think it's going to be really interesting regarding the election. It's really going to come down to like the last month and those swing voters. So as investors, I think keep a positive bias, but also expect volatility. So stay invested and stay diversified. So how financial advisors can prepare for an election? I think the easy answer is staying diversified. There could be various outcomes post-election, and some of those outcomes that can happen aren't necessarily going to be immediate because there's policy lags. So if there are things that are implemented, it's going to take 12 to 18 months for a lot of those things to get implemented and actually impact the economy and the markets. So again, really, it's just staying diversified and using diversifying asset classes, again, using fixed income, using global credit, using alternatives, and using real assets.